A very good day to you, traders. Welcome to the Flow Show, September the 10th. Big data on the way once again after yesterday's big data. It's not going to stop today and tomorrow, and it's all the precursor for the Fed next week. I've also got the ECB to be called tomorrow as well, so lots going on. Morning, Kay. Welcome back.
Morning, Ryan. Thank you. Morning, everybody. Yep. Ready for the next leg of data. Maybe not the biggest, not the biggerest ever, but still big enough in the next two sessions to get the market rolling again.
Yep, absolutely. And we'll get stuck into that stuff later on in the show. Right. First and foremost, going to start with a bit of data out of China. And CPI data looking sucky again. Inflation not doing too well. CPI coming in at minus 0.4%, worse than expected year on year, than the minus 0.2 expected, and the flat seen last time. PPI year on year coming in as expected at minus 2.9%. The only saving grace was that the core held up a little better in those numbers. That's been brushed under the rug by China's National Bureau of Statistics, saying that the CPI drop is due to a high base last year. The good old base effects excuse being thrown around there. Well, we'll wait and see what happens over the next few months, but inflation over there, very, very benign at the moment. Japan, different story. Reuters Tankan Index jumped to 13 from 9 prior. This is a manufacturers index, large machineries and that sort of thing. Highest in 3 years. Non-manufacturers also jumping 27 versus 24 prior. So good numbers there as well. Another feather in the cap for the BOJ and for indeed any politicians looking to enter the leadership race. They want to go in with a good economy. Everything that's going on in there has got more trades going into options. Last week I reported that hedge funds and the like were piling into option hedges against a big rally in the yen. Bloomberg reported overnight those hedges have increased markedly after that BOJ sources piece yesterday. So a lot of movement in the options market on the yen strengthening. Over at the leadership race, we've had lawmaker Motegi jumping in the ring. He's put forward that he's going to be running the leadership race. He said the basic direction is the Bank of Japan normalizing ultra easy policy. He aims for wage gains outpacing inflation within 2 years. He says the Ishin and DPP are among opposition parties he wants to speak to. Now, as far as I know, and Kay, you might be able to confirm this, Motegi is the only confirmed runner so far. We've had reports in the press that Takaichi, Hayashi, Koizumi, Kobayashi are reportedly looking to run, but I haven't seen confirmation that they're in the running. There's also a possibility of Kato being put forward. He's one in the press who says that he's a possibility. Only one confirmed, I think. Kay, unless you know differently.
I thought actually Takaichi was in there, but yeah, you may be right. I honestly haven't seen the difference. People saying they intend or they plan or they are effectively running, but I guess we can relatively safely say that those top 5-6 runners that we had on the past LDP leadership election against Ishiba are probably going to throw their hat in the ring to run again. That is something that I think we can be relatively sure of, unless we find like one or two accords somewhere that the one is running with the other one's support. That's possible as well. But yeah, basically, I guess the market or political watchers' expectations for those 5, 6, 7 even running could be on the money.
Yeah, I mean, it obviously could be even more after it was put forward that it's going to be an open contest, i.e.
Yeah,
not limited to MPs.
yeah, but the thing is, they need to be backed by at least, what is it, 20 or so LDP members of the closed party or the closest party. I think they need at least 20 members to back them to be able to run. So there may be, so to speak, 20 or 30, but they won't all get enough backing to effectively run.
Yeah, yeah. Right, so moving on with that. Well, before we move on for that, we're going to get all these sorts of headlines, people announcing them in the running and what they're going to look to do over the next year or two. So that's going to be flooding the headlines until we get the final list of who's in the running. Our mate James in the chat room, he's already opened up his book on which ones to buy and sell the yen on. So,
you know what? It wasn't a bad list actually, but
no, it's pretty good. It's pretty good. So
let's say that you've got you're looking at it obviously from the outside. We are even if I lived in Japan, it's not like as if I really was that big a specialist on everything that happens in the diet. But I think we can kind of say like the two extremes of the runners, maybe Takaichi and Motegi. And then you have a kind of a spectrum in between floaters that maybe to a more or less a degree hawkish or dovish.
yeah, very much so. But those Motegi comments seem to be sort of par for the course of what we got already. There wasn't anything big in those, but early days yet. But yeah, James in our chat room's going to be looking to earn some brokerage over the next few weeks anyway. Right, from one political football to another, over in Norway, after their election win, Norway's finance minister Stoltenberg said Norway's Labour is willing to amend the wealth tax. He says any tax reform will contain both popular and unpopular elements. This is really Norway's bit of a poster boy. Our mate Kurdy sent me a link the other day about some tax they were looking to put on, an exit tax on unrealised assets. So if you turn up in Norway owning a bunch of assets, they may not even move in price, but if you leave, you'll be subject to an exit tax on the unrealised value of that. So there's a lot of crap going on over there, and a lot of countries, well, a few countries, UK included, have touted potential wealth taxes. Well, Norway are in the thick of it with that, so it could be a bit of a poster boy to watch for the others. Macron, he's appointed another prime minister, Sebastian Lecornu, if I can pronounce that right. He's in the hot seat for however long that lasts. As I said, they've put a revolving door on the office of the prime minister, so it won't be too long. His first task is to try and sort this budget mess out, so we should probably expect no confidence vote in the next few weeks. UK's City Minister Rigby responding, it seems, to the Barclays CEO yesterday, who said that bank taxes are not going to be good for growth, said that we will keep the bank tax regime under review. So they all shot across the bow of banks there. A UK PM spokesman was at a cabinet meeting where Finance Minister Reeves said the government was focused on going further to support the Bank of England in reducing inflation and also controlling public spending and driving growth. It's been reported it was about 10 minutes before everyone stopped laughing. Bit of data out yesterday from the US. First things first, the NFIB. This is just a small monthly number, but it's been improving pretty much. It did have a little dip in the middle part of this year, but it's back on the upward path, shall we say, which is a good consideration to think about the size of the business going on here. So business optimism running hot again in the US. Again, we're seeing some data that doesn't want to die or is not looking to die. Then we had those revisions which came in worse than expected. Some minus 700, minus 800k expected, came in at 911, and the market outcome in the end was sell rumour, buy fact. As far as the dollar was concerned, we saw a little blip in the dollar initially, 30-40 pips in something like dollar yen, and then it flipped, well, no, sorry, a bit more, and then it flipped right around and roared all the way back again. So there's lots of arguments about this data. A lot of the market is looking at it, obviously, with the focus of what's going on in the jobs market. But as I was saying, it's old hat data. It's going to go into the rearview mirror pretty quickly. It doesn't change anything on where we are at now. But as I said, the dollar has recovered since then, maybe just squaring up ahead of the bigger data coming today. Fitch, they're getting on the rate cut guessing game in the US. They expect 25 BP cuts for the Fed in September and December, with 3 more in 2026. So that's yet another entity looking at around that 3% mark as a landing zone for Fed rates. And we talked about this in length yesterday on the show and in our chat room. The benchmark going into the FOMC seems to be, for next year's dots, seems to be 3%. We'll see whether the Fed confirm or have something different to say about that. Treasury Secretary Bessent says Trump inherited a far worse economy than reported. I'll blame the data. And says he's right to say the Fed is choking off growth with high rates. Says also there is clearly cause here with Fed's Lisa Cook, and notes that Cook hasn't said she didn't do mortgage fraud. Also is confident that the Supreme Court will back Trump's tariffs. Now, on that front, there was a story yesterday that the Supreme Court is going to act pretty quickly. It's going to fast track the hearing for early November. It doesn't often move as swiftly as that. So November's still a couple of months away, but that's moving quickly as far as that court goes. So we could have something coming up, this court case on the tariffs, quite early November. A judge has also temporarily blocked Trump from kicking out Lisa Cook from the Fed, so she stays in place full duties. This case is still very, very important because it is the whole question of whether a president can fire a Fed member. Because if he gets the win over that, that has ramifications for Powell or any other Fed head from that point on. So Lisa Cook in herself may not be important. It's the court case and the ramifications from that for the longer term that is the most important. So these headlines are flying around, but you don't want to ignore them. US Vice President Vance says it's difficult to overstate how useless the BLS data has become, and says a change was necessary to restore confidence. He's got a point really after these revisions that keep happening in all the data. Trump has apparently told the EU that he wants them to hit China and India with 100% tariffs to put the pressure on Putin. And we also had some headlines overnight that some drones, air whatevers, had been shot down, that landed in Polish airspace, invaded Polish airspace. It's all being dumbed down, shall we say. It's not the first time that Russia's flown stuff across Polish airspace into Ukraine. They sort of curve it round Belarus into Poland and then back into the Ukraine, part of their shenanigans that they're up to. Apparently Belarus are playing the good guy on this one, because they apparently shot down some of those drones themselves and alerted Poland and Lithuania of the approach of unknown aircraft to their country's territory, which allowed the Polish side to respond promptly. Belarus is on the side of Russia, so as I say, playing a bit of good cop in there. As I say, it's all been played down a little bit outside of the first initial headlines. Market not really moving at the moment. I'll put that into the scenario of Putin messing around, playing games, rather than intentionally targeting Poland, which would be a different kettle of fish altogether. But that's his way. Stir the pot. Make sure everyone knows what's going on. Kay, I know you was off yesterday. I don't know if you managed to keep abreast of any of the data and whatnot. What did you make of the jobs thing?
Yeah, it's bigger than was expected. Rear view mirror, yes and no, because it just shows us that the Fed, job-wise, where we are now, where we had the confirmation that is the most important thing that they are watching now. The balance has shifted from inflation to jobs over the past couple of even months, let's say, since the last FOMC. So it does put the Fed somewhere behind the curve, right? So I would say that it will prevent, unless we see very big variations to the top side in PPI, especially CPI tomorrow. I think it's going to prevent the yields from rising much into the Fed meeting next week. So I think for that it's relatively important. Whether it's going to push them to do 50, I don't know, but I wouldn't completely put the chances at zero. I know everybody looks at 25 BPs, but I'm maybe thinking that there is the outside possibility that they go for a 50. But therefore, of course, we can't have what are we expecting for tomorrow? CPI 2.9, core at where is it? 3 or something, 3.1, where we obviously we can't start to reprint way above 3%, yeah, tomorrow. But no, I just think it keeps the path on the rates, or at least for now, the bond market should remain supported on dips on the back of that number. That's what I would say. I think that this morning that blip lower in the euro, we have seen the euro cross as being a bit under the cosh, right? I think it had to do with the Polish shenanigans there and those Russian drones. I think it had some to do with it, because we also saw Scandinavian crosses, and Scandinavia we know is so much closer to Russia as well. But then at the same time, having like big how shall I say, relationships with their main relationships with Europe. We also saw them come down, and then the euro dollar coming down. That blip, I think a lot of that was Poland, and now we are going to concentrate back on the US data. That's what I would make of that early morning move that we saw.
Yeah, but strangely, it didn't move markets that much when the news was first announced. So it looked like
Came out in Asian time,
and reacted.
It came out in Asian time, right?
Yeah. So it looked like a bit of a reaction, and I think there was a bit of 8 a.m. man in there as well this morning. It seems to move round about that. But anyway, it is what it is, and we have to deal with it. But as I say, for now, it looks like it's been sort of brushed under the carpet. As far as the Fed goes, mechanically, because we're pricing a 25 as a pretty much 100% certainty, that the only move more dovish we can get about December is to start pricing a 50. I don't think a 50 is on the cards, because I think that the optics of that would suggest that they're panicking about something, and that's going to get the market going really extremely dovish. But if we get softer data, i.e. it's much lower than last month, let alone missing expectations from both PPI and CPI, maybe it does raise the spectre of a 50, but I still think a 50 would be seen as a panic move.
Yeah, you could be right there on the optics about it. But what I would not rule out though is 3 times 25 then until the end of the year.
Yeah,
Uh,
no,
that is
absolutely.
something that I'm really thinking really thinking about.
Well, as I say, and as I said, I had a big discussion about this in our chat room and here yesterday. If you're looking at the Fed dots for next year, they have 350, 375, so call it 362 as the midpoint for rates in 2026. If they do 3 cuts this year, that puts them at that level already. So they're going to have to take rates lower next year than that. And if they do a 50 in September, then there's the risk that they do. Well, can they go back to 25s if they do a 50k? I mean, what
Yeah,
message would that send?
of course, of course they can go back to 25 and they can do 50 and well, I mean, okay, there's lots of permutations possible because they can do 50 and then go back onto pause
Yeah,
and say like, okay, this is now we have caught up. They could something along those lines. We have caught up now with the jobs market, and now we are back onto firmly data watching. And because inflation doesn't warrant deeper cuts, they can do like a big cut and then sound less dovish than they may be. I mean, or they can do 25 and say like we're ready to adjust further into year end, and then we go back to pricing 75 anyway. So I mean, there's a few things that they could do. Yeah, I mean, the most likely scenario is still 25. I'm just not going to rule a 50 out. That's it. I'm
yeah,
it would come as a lesser surprise to me than it was 3 weeks, 1 month ago, right?
yeah, absolutely. Yeah, absolutely. Yeah, you never can rule it out. I'm giving it a low probability anyway. But as you say, there's many permutations, but it's their task or Power's task is the optics of it, making sure that if they do a 50, it's not seen as a panic move, and if they do a 50, it's probably going to be a fairly undovish 50. But who knows? We'll wait and see. As I say, longer term, the market is coming around to a 3% level next year. That's what we need to see in the dots. Does the Fed agree or disagree with that? And if they're pulling a 50, then the market's going to think they might be going lower than 3% next year. So that's what we'll be trading around that. Right, that's it on the news front. Anything else from your side, Kay?
Oh no, I think we've covered everything.
Good. Well, let's have a look at what's coming up in the data today. So we have got this PPI. Now, the core is expected to come down 2 pips to 3.5%. Headline is expected unchanged 3.3%. That's opposite to what we're expecting in the CPI tomorrow. We're expecting headline to go up and the core to stay unchanged. Now, it is wonky this month because we're getting PPI before CPI. Usually this adds or subtracts to the CPI number. It may be different. 2 reasons. One, PPI can be a far more volatile number, so you can see bigger variations from what's expected. So if there is a big variation either way, you're going to see a reaction. Secondly, PPI components feed into PCE as well, so it will get the market judging what's going on with PCE, which to a certain point might lessen the effect of CPI tomorrow anyway. So there could be bigger volatility today on the PPI than on the CPI tomorrow, but the numbers will be what the numbers will be. Either way, I think if we're on the money, maybe a little bit hotter, you're going to see probably marginal change in these rate expectations, primarily more so for the months after September, the Fed meetings after September. Little change for the September meeting. The market's nailed on for a cut. It's been nailed on for a cut for weeks. So that's not going to change meaningfully unless it's super stupidly hot, like core PPI at 4% or something like that. But even then, I don't think it's going to change anything because Powell has told us that right now the labour market is more important than inflation. So trading wise, I'm still looking. I put on some dollar yen shorts yesterday. which I had a little bit of a profit on after we got that revisions blip, but then it shot all the way back up. I've kept the position. I've added a bit more near 147.50. I'm happy to build a little small position on any rallies in dollar yen because I think, the ratio of reasons why it might go down, why the dollar might go down, is far more than why it might go up at the moment. So I needed to scratch the itch and have some dollar shorts on that I can play around with. Kay, what are you thinking about trading this one today?
Well, first of all, I would personally still see CPI tomorrow more important than the PPI. I know the effects on certain other data points coming up, etc. But this PPI has always been a bit more volatile. Not everything is in there. There's this discussion going on about what's in there, what maybe not in there, what's important, not important. But and to me, it's still the base case is that CPI tomorrow is going to be more important. Of course, the market will try to extrapolate. Oh, look at this PPI number. That's going to be the CPI tomorrow. And we all know how useful that is because you get one number today and it may show something slightly different tomorrow, which is usually the case. But yeah, so I think the all ingredients for the dollar to continue a bit lower right now, in general, I agree. And I've been basically bearish dollar since Trump got into seat. But I agree that that there's still some enough in there to be relatively bearish on the dollar. We may see a bit of a blip, as we have seen one yesterday while I was off on those big payroll revisions. But the overall direction remains the same. Now, which pair is still a question, okay? Because we've seen euro can act a little bit bizarre, as we've seen this morning again. I think it was a bit of a stop run this morning under 117, wasn't it? It looks to me that way. That some short termers have been cleaned out there, and now we are seeing the bounce. I'm not yet convinced about what to do in the yen because I always look at those yen crosses and yes, we are a bit lower in the euro yen. As I said, the euro is maybe not the best expression, but I'm saying sterling yen nearly back at 200. Aussie yen, yeah, look at it. Aussie yen around the highs. Even Kiwi yen is joining in now. It's just I just so. I don't know. I only half trust the yen, so I'm more expressing it via things like the Aussie, the Kiwi, and today this morning I sold dollar Norway again because it's just looking technically also much better. But I completely I for sure won't disagree with you on the dollar yen side for now because of the dollar. But yeah, still the yen cross is holding me a bit back to go straight into dollar yen.
Yeah, what did you think of the? I mean, it's Bloomberg, so masses of salt to be pinched with that. But what did you think of the BOJ sources piece yesterday? It sort of confirms what we've been saying for a few weeks now, anyway.
That they could?
Yeah, they could hike by the end of the year. You know.
Yeah, oh yeah, I think they could, man. I think they could. I think they could. You look at the economic data, why not? They are still only at 0.5%, right? Okay, the market is going to then go back and speculate on the ultra long term and whatever. But let's not forget that the Bank of Japan, when they hike rates, it's the short term, right? It's not the long term. There are some pieces saying that they won't buy as many ultra long term bonds anymore, but then on the other side, the government won't issue them. So it's becoming a completely speculative market, that 30-year JGB, in my opinion. Because we also heard from the Japanese whales that they are shortening maturities for the time being. So I mean, it's a virtually empty market, that ultra long term thing. But I'm in the camp that they could hike before the end of the year. We were even talking before Ishiba through the towel. I was even thinking that based on the data, they may actually go earlier than what the market was thinking and doing one this month. But the political stuff is probably going to hold you either back from pressing the button, right? So I'd rather see it happen on the next meeting, yeah, which will be end of October, if I'm correct. Yeah, 30th of October. I doubt that they'll hike in when the politics are not decided upon. Huh?
Yeah. Well, the piece said that the hike at the next meeting was ruled out. But yeah, that leaves the door open. It is Bloomberg, so yeah, we'll probably wait to see what we get out of Japanese press closer to the meeting and whatnot. But yeah, it's just another reason why I want to play dollar yen short for my dollar trade, because it's got that additional input from possible Bank of Japan hiking as well. But yeah, we know they'll be slow and steady either way. Right, before we move on to talking in more detail about some of the prices, we've had a question from Mark in our chat room. Can we have a quick chat on trailing stops? When best to use them versus hard stops? How much of a gap to leave from the price? And is a trailing stop for very experienced traders? And should we generally use hard ones but constantly moving them? Right, trailing stops, same as everything else in trading. It's not whether you use them, it's how you use them. And if you use them properly, then they can benefit. The best reason for using a trailing stop is obviously to move your risk to zero as quickly as possible, and then to lock in further profits, allowing you to run a trade. Now, there's do's and do not do's of this. If you employ a trailing stop strategy, but don't take profits when your trades are in profit, then you are always risking your stop. So you're always risking giving back what you gain. If the price moves up 50 pips in your favor, you move your stop up 30 pips, but you don't take any profit, and you keep doing that as the trade moves, well, you're always going to be that margin behind your trade, because eventually you will get stopped and you'll give back some of the gains that you were in. So I know myself, and I know Cayman does it, we use our trailers a lot of times when we're doing the slice and dice. If we've taken 20 pips, we might edge our stop up a bit. I like to get my stops to zero as fast as possible, my risk to zero as fast as possible. How you assign your trailing stops and how you use them is when you've taken a bit of profit, you've maybe got your stop to entry or something like that. If the trade moves further in your favor, then you do the same thing with your trailer as you do with taking profit. If your trade hits a level, let's say I've bought dollar yen off that 146.29, the next level is 147.64. So we're hitting a head there. I might take some profit there. Okay, might take some profit. I move my trailer up. We've got a couple of levels here. Let's say I stick it under 146.80. So now my trailer's gone from maybe down here. It's gone to, let's get my little pencil out. So my trailer may have originally been there if I was long here. Now I've taken some profit here. So my trailing stop may move to there, maybe to there. Depends on how I feel, how the market's going. Okay. Now, if I've taken profit against this level, it's because I've respected the level. So if the price then breaks that level and I want to bring my stop up, I'm going to bring my stop up under that level, because if it's respected it as resistance, I'm going to expect it to be respected as support if we come down here. So I don't want to put my trailer on that level or just above that level, because the price might do that. And then I'm pinged out my stop and the price has gone on to wherever. So you use the levels that you might use to take your profits the same way to place your trailing stop. Now, there's platforms, several trading platforms allow you to set automatic trailing stops. That's not something I do. I do it manually because I can assess the market. And usually I give myself a fair bit of margin because that's one of the questions Mark asked, how do you mark your stop versus, what gap do you leave between the spot price? That's based on whatever market you're trading and the volatility in that market. For something like dollar yen, where we've still got high volatility, you need to give yourself potentially a bigger gap between your trailer and the current price. Something like euro sterling, you can do it a bit tighter because it's a slow mover. So you really need to look at how fast a pair moves, what the risks are. If we've got a big event coming up, like we have with PPI, I'm not going to have my trailers too close to the spot price because I don't want to get knocked out in the noise to find that then it carries on its merry way. And you can adjust your trading stops. If you've got your trading stops in profit, all you're fucking around with is whether you're going to have less profit or not. You're not talking about losses anymore. So it's a different psychological aspect you're in. So let's say I've got my stop here just below 147. We've got PPI coming up. I might think to myself, no, I'm just going to shift it down a bit to there maybe to try and keep out the way. Shit might happen. I might still get knocked out. Well, that's trading. After the event, once I've seen what happens, I might tighten the stop up again, put it back where it was originally, or if the market's moved in my favor, move it up to the next level. So it's all part of managing your trade. And as I say, trailing stops are good because they can lower your risk first and then lock in your profits moving forward. And it allows you to try and push a trade as far as possible while staying in it. That's exactly what I did with dollar CAD when I bought in the 135s down here. In this move, I had my trailing stops up and up and up. I wanted to get above here. While we couldn't get and hold above here on 139, I kept my stops below this level here. Then we got back into the 138s in this move, and I thought, right, 137, just below this level here, that's where I'm going to stick my stop. And boom, I got stopped out. But it was here. Once we had this move that broke this level, held it as support, bounced, right, my trading stop goes under this level. And it survived. Well, it would have survived if I hadn't moved it up again. So that's how you do it. You've got to assess the market. You've got to read the levels, what the price is doing to say, can I move it up? Where do I need to move it up to? Okay, if we'd have done that in this move, if we'd have stayed here and done that, then I probably would have pulled my stop up to somewhere like that instead of down there. And you just edge it up, hold this level a couple of times and bounce, then my stop would have gone up to there. Okay, so you use the levels as you exit to then use them for your stops. You've got to respect your levels all which ways. Kay, your thoughts?
Yeah. First of all, I fully agree. Never use automatic trailing stops. Never, because they are going at one stage. They are going to take you to a level where which is not a level. And so the main thing to adjust trailing stops, first of all, if you use trailing stops, means that you are in the right position. Okay, so trailing stops are usually a good thing. But never use automatic traders because they just are going to take you to a zone where that either doesn't mean anything or just too close to the market, and on any adverse data point or news, as we see nowadays, there's a lot of geopolitical news, for instance, going on, and it's going to take you out on one of those moves. So always when you use trailing stops, always I'll come back to that, Bren, what you just said. But always identify the level, and the dollar Canada where Ryan is on there is an absolutely great example. Okay, Ryan and I, we used in combination with slicing and dicing because this is just the way we trade and which works for us over the number of years, and it works whether you trade for your own or you trade for other people, where you actually look for returns instead of like just money. But it's a really good thing. And then, for instance, that dollar Canada there, if you were buying along that, assuming along that line there around those three bottoms or just above, waiting for the confirmation that it holds, you can even have bought just above the purple zone, saying like, okay, this is now confirmed. Those three bottoms, that trend line is doing well. I'm going to buy. So now I'm going to start raising my stops after a while. but you don't do it before. So you get that first move, which was 23rd of July, yeah, was the bottom. Then you start moving up. If you can, yeah, if you can follow me with your cursor, Ryan. Yeah, then you start moving up, okay? So now, first of all, you go through that little purple zone there above, okay? Stop. Yeah, stop. You do not yet put your stop through just below that zone because you don't know yet what's going to be next, okay? So if you use trailers, I would still remain well below that zone, maybe around that yeah, red line there below, if you want to get just into zero, okay? Now, once you have the retest, which is around the 7th of August, and then you start to bounce again, then you move your stop up to where the cross is, where Ryan's white little X is there. Yeah, there. Then you move your stop up, okay? And then what? Because you had the retest of the zone, which was actually a really nice zone there. And then when you start to move up again, then your trailer goes up there. Now you can have the choice now whether you want to keep it for a longer term position, whatever, you can leave your stop there. But once it goes above the prior high around end of October there, and you shoot up there, you could actually have brought your stop loss under the where is it, around 138.5 there. So yeah, we are around there. You could actually have moved your stop there, and you will get stopped on the trailer, but you will have banked a lot, right? And then a new trade can develop. Or option two is to have left your trailing stop, if it's a longer term position, still where the X is, the prior X is, and you would still be in the trade right now. But will it have brought you a lot? Not really, because in the meantime, even if you would have been stopped out on the 24th of September, no, 24th of August, and I was missing in the months. On the 24th of August, you could still like re-enter a position if you then 29th of August, yeah, exactly there. I mean, you retest the zone, you can re-enter the position and start the game all over again. But that is somewhere where I would have put the trailers, and the trailers are pretty good because, as I said, it is somewhere where you are in positive. Now, Bran, you said I thought the trailers were a good thing if you are asleep or away from the computer. That doesn't really matter much for as long as you don't do automatic traders. Yes, we all need to rest and to sleep, but the decision to put a trailer stop in is going to be based on levels, not really on the time, right? And that is where I think you whether you're asleep or awake, if you manage a position via trading stops, it doesn't really matter, does it? It's the time of the day. It's purely the levels that matter and the direction that your position takes. Okay, but then the other question that Mark had, is it only for very experienced traders? No, it's work. It's work. I mean, everybody, because what we're using here, Ryan, myself, are very basic text. Look at the bottom end of our screen, and that is always the same between Ryan and me. We don't use any specific indicators. For us, the only thing we use is, of course, we are more based on fundamentals, etc., to form a bias, but all the rest is price. All the rest is just price. So you don't need to be a wizard in everything that is takes or whatever, very experienced. You just do the work. You identify the zones, like this one in Dollar Canada was really great. Even that red line there above was really great. Even if you put your stop there, exactly. Even if you would have put your stop just below to lock in your profits, it was still a very good trade, right? But that's kind of how I would use them, and really I don't think it's only for very experienced traders. As soon as you got some experience, wouldn't do it day one, of course, but as soon as you got some experience, you've got the basis of text. You especially using trailers also means that you're planning to stay in a position more than just the intraday jobbing, right? It is something that you will have studied a little bit before, okay? Even it doesn't need to to be a long study. But if you see, for instance, where it all starts from in June, the first bottom and the second bottom early July, then the third bottom end of July, and then you decide to enter the position, have been looking at a nearly 2 months period. You're not going to do this is not just oh, I'm going to buy dollar Canada for an intraday play because I just fancy it higher. No, this is a thought process. And then part of that thought process, if you want to use them, your trading stops is going to be then recognizing your levels that are going to be important. And time doesn't really then play a role anymore because you made a decision to run a position in that way, which could also be an evolving process. You may not think about trading stops straight away when you enter the position, but only after the retest of that purple zone a little bit later, and then you go like, oh, this is really holding well. Now I'm going to continue to use those trading stops. But
Yeah, I
again,
think
it's more work than experience.
yeah, I think it's a bit of a psychological block for a lot of traders. You know, traders look at their charts because they want to know where to enter a trade. They have their levels, whatever indicators they use because they want to get in a trade. Now, if you are putting so much faith in your coloured lines and indicators and whatever to enter a trade, why are you not putting the same faith into those levels, lines, indicators when you're managing a trade? So many people, oh, it's going to hit the 200 DMA, so I'm going to buy it for 500 pips. Well, what are you're trading one technical level and you can ignore everything else. Okay, so it's the same process, whether you're entering, exiting, moving stops or whatever. You use the price action against your levels to determine how you employ your trading management, your stops and whatever. Mark, you say, how do you tell a level is broken for sure? Is that experience only? Just looking at the price, mate. Look,
Yeah.
I have had this zone in here for ages. We've had these little moves up, but largely it hasn't lasted long. Boom, we got a break. Bang, it held it. What more can I show you how to know
Yeah,
that a level is broken and is holding than that? It's
and it
clear
is
as
just the
day.
market. It's just the market who will the market that will tell
Yeah.
you. It's just the
And
market that will tell you. Once we're in a trade, we don't have we have to let the market play. Entering a trade should be it's a game of likelihood percentages, right? I mean, you want
yeah,
the biggest percentage to be on your side. So that can be a very simple trade in a dollar pair, or it can be one of the reasons why I do a cross rather than a dollar pair because we have big data coming in dollars. But it should always be a thought process to enter a trade. But you don't, from there on, you don't know how much you're going to be in the blue,
yeah,
because we are specifically talking about trailing stops here. So that means, per definition, that your trade is in the blue. It's not in the red. But then it's up to the market. But you know what the biggest block is, Ryan? Time.
yeah,
Retail traders do not have the patience. Most of them do not have the patience. If you have time on your side and patience on your side, that is where it's going to be really good to run trades because there's a big block for retail traders. Retail traders, they want to enter a trade and be right the next 30 seconds for the whole trade. I mean, no, it doesn't work that way. It does not work that way. Time is an asset. Patience is an extremely big asset to have.
yeah, exactly. So yeah, on your levels, you let the price action shows you. Look how you don't often get such a great move like this, an indication that a level is holding, and you've got similar up top. We cannot get through this level for any length of time. Okay. So until that happens, this level isn't breaking. You may get these moves, and if you trade a break on these moves, yeah, if you think, right, we're at 138, 70, 80, I'm going to buy it because it's breaking. Fine, you have your stop tight underneath it because if it fails, you don't want to be down here before you get stopped. But in the meantime, it's not. So, this level, what happens here could happen here. We could break this and then boom, it comes back and holds and goes up and boom, it comes back and holds. There's your confirmation that the level's broken. Okay. There's no guesswork needed in any of this. Let the price action tell you what it is, whether that's my picture, my lines, or your picture, your lines, whatever it is. But yeah, so I hope that's giving you a bit on training stocks. Anyway, Kay, do you want to have a look at anything quickly?
No, I just wanted to reply to Michael and Galaxy on that because I'm looking at the clock as well, Ryan. Yeah, there are levels, but basically we are still very much in ranges. You could copy paste all the levels apart from a couple of currency pairs. We are still in those ranges, right? No, just commenting, and Galaxy was replying. Michael was asking to revise those 2 big years in a row. Does that call into question the unemployment rate? And Galaxy was replying, less reaction this year, and it was directionally the same as last year. Unemployment rate is likely a bit higher, but offset by those not counted. Yes, but then again, I tend to agree with Michael. If you got such big revisions, why is employment rate then not a bit higher? And I tend to agree why, and it's really a question that I had as well, is why with some backward looking, do they not revise the unemployment rate? Do you have any clue about that, right?
Because they're useless. Would be
Yeah.
my top answer. But
But
no,
in
I
theory,
think,
the unemployment rate should be higher.
yeah, I think it's because all the metrics underneath are adjusted or taken into account as well. It's not just take out 911 jobs and the unemployment
Meaning
rate
that,
should be for 0.8%. I think it's everything sort of
yeah, the
adjusted in
participation
line
rate.
with that. Yeah, things like
Participation
that,
rate will
and
probably have to be revised
yeah,
as well.
and amount of people. Because obviously, if you've lost 900 jobs, but there's 900,000 less immigrants or migrants in the picture, then it's
Yeah, but
sort of
that didn't
zero
count
sum
for
thing.
last year and the year before. That did not count for last year and the year before.
No, that's correct. So
So, but
it's
maybe it's
yeah.
the participation rate also, which is
Or
completely.
I'll stick with my first answer that they're all just useless.
Okay.
The easiest way to explain it. Anyway, yeah, thank you very much, Kay. Great insight as always. Sorry we haven't had a look at too many prices today, but I'm not going to make excuses for that because we've had a good chat about stocks and stuff, and we like to throw out a bit of education now and again. So I won't make no bones about that. Join us on Face where we will be looking at prices in more detail as well. Thank you for coming to the Flow Show. Enjoy your day. Trade safe. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.